Hey, this is Danielle. How's everyone doing today? Welcome to long-term investing and stocks. So today I'm doing this session because it was requested by a member. Oftentimes I talk about my long-term stock picks in the trading room at Simpler Central. I also talk about them, in the media. But today I'm going to be going over just an outline of what I do using that strategy. So it was a couple of years ago. I don't know exactly at what point, but I started trading back in 2013, and so it was kind of funny because I got into options trading before I started long-term investing. And I am a trader. I've always been a trader, but then there was some point where I said, I don't know why I'm not just buying and holding these stocks on a longer term time frame instead of getting in and out all the time. And so it was kind of funny to go, the opposite direction. Most people get into long term investing first, and then they get into options trading later. But I kind of did the opposite here. So essentially what I do is I use a lot of the setups and a lot of the strategies that I use for trading, but then I just use them on a much longer term time frame. And unlike trading, what I like to do is I like to get in and I like to stay in, and I don't get out. So, well, I'd say there's a few instances where I've gotten out, which would be primarily when a stock just completely shifts, major breakdown, and when I don't think that the situation is going to improve. So let's go ahead and talk about a couple of the different reasons, why I would want to get into a stock. So when I'm looking at it on a long-term basis, I'm going to start with the top-down approach. And so that means starting with the indexes first. So I'm looking at the indexes, and specifically, I'm looking for the sectors and I'm looking for relative strength. So as traders, we're aware of which products we're usually trading based off of their relative strength, right? Last couple years, especially, it's been AI stocks, semiconductors, Magnificent Seven stocks. These are the stocks that we're already trading anyway due to the relative strength that they have. And so for me in my long-term investing account, instead of just getting in and getting out of them all the time, I just want to be regularly buying those stocks in that space, dollar cost averaging over a span of time, um, plus looking at and identifying key moments in time where I think that, I'm going to have a little bit better of an edge because, there's a lot of long term investing strategies where, you don't take technicals into account. You're not looking at setups and you're just kind of focusing on the fundamentals. For me as a trader, I don't think I could do that. I absolutely need to focus on technicals, and I definitely take the fundamentals in into account as well because I trade a lot of earnings, something that I cover. I'm pretty versed in knowing and understanding how earnings are impacting stocks. So these are basically the things that I will take into account: the technicals, and then also the fundamentals. And then the final piece of this is really just dollar cost averaging. So if I think back and I said, man, I wish I would have started this like in 2013 when I first started trading, like that would have been great. But to start it a couple years later, that's, still great overall. So it's never too late to start, is what I like to tell people. And, you'll look back, and if you look at the way that the market is and the way that the market trades overall, more often than not, it is up. So when we start off with this strategy and we say, okay, so where do you focus? What do you do? I always start off with the indexes. So in this case, I'm going to start off with the NASDAQ. The NASDAQ is the relative strength index. As a part of my strategy, what I like to do is I like to automatically transfer money into my brokerage accounts. Once a month or every 2 weeks, just depending. There's definitely time frames in my life where, I didn't make any transfers for a little while. Like maybe I just bought a house or I did a remodel or something like that. I didn't have any extra money to invest. That's completely and totally fine and normal. And so, it's not going to be the exact same every month or every year, but over a span of time, when you have, extra money that you can use to put into the market, if you just have a regular transfer going, regular transfer, regular transfer, regular transfer, regular transfer, then what you want to do is you want to wait for these moments in time where you get a decent pullback in the indexes. Right here and now with the NASDAQ at a brand new lifetime high, it's definitely not the moment in time where I'm going to be buying any stocks, but I still have my transfers going so that when I get a pullback into a key psychological value, into a critical zone of support, that's going to be a spot where I can go ahead and make some purchases. Now, even when the NASDAQ is at a new high, there's going to be something that we can buy. So let's go ahead and look and see what that could be. But essentially, what I like to do is I also take into account the sector spiders and the top sectors. Okay. So if we look at the NASDAQ, obviously, NASDAQ is up at a new high here. I use a lot of Fibonacci. So if I throw on some Fibonacci targets, you can see that we're past the 1272, past the 1618. We're past the 18,000 key psychological value. So the next upside target in the NASDAQ is going to be about 18,700 and then 19,000. So could it keep going? Yeah, it could keep going, but that doesn't mean that it's going to be a great idea to buy it all the way up here, right? So after looking at the NASDAQ and then comparing it to the S&P, as far as the S&P is concerned, we're making some new highs here as well. So, sometimes I'll have a situation where I'll say, okay, NASDAQ is making new highs, the S&P is not. Maybe I can just get into the S&P. But that's not the case right here now today because that's making new highs as well. One way that I will just get involved with the S&P and with the NASDAQ is just very simply buying ETFs. So the majority of my portfolio is just in stock, but I have started buying more ETFs, especially because, throughout the bear market, like obviously stocks are going to be a lot more volatile. For me, I am a riskier investor. You're not really going to find me trying to make things totally balanced because I just don't really see a point in that because, if you are perfectly diversified and one piece of your portfolio is going up and the other piece is going down and you're just not really making very much progress, to me, like that just doesn't really make a lot of sense. I'm also, I'm younger. I have a long time horizon, like 30, 40, hopefully 50 years, knock on wood. So for me, and especially coming into this as an options trader, a risky aggressive options trader, I do like to have more risk, and that's how I get, more growth. So I do have some ETFs in there, but the majority is going to be just stocks. I did start adding more ETFs just kind of, during this kind of time frame. Just grab some baskets and even things out a little bit just so it wasn't as volatile during some pullbacks. But, I think that I do think it's important to have like individual stocks because you get the dividends and stuff as well. So if you're never unsure of what to buy, you can just buy the spiders. You can buy the QQQs. I was telling my husband just yesterday, I was like, if I die, you need to take my life insurance and you need a dollar cost average into the spies and the QQQs for the next, 20 years until my kids are old enough that they maybe we can help them out with something. So that is the most basic and simple thing that you can do. It is something that I do in my kids' accounts, where I will add into just the spiders and the QQQs. The better times to do it are going to be with the weekly signals and with the monthly signals. So for trading, I use the squeeze, and you can use the same thing for investing as well on a higher time frame. So this, for example, is the spiders on this weekly time frame, and you can see that there are multiple weekly squeezes. So the squeeze is where the series of green dots changes to white dots or changes to red dots, and that's when price is consolidating and it's going to break out. Now, the squeeze, the majority of the time, it fires in the direction of the trend. There are going to be some pullbacks. For example, when we went into the bear market, this was a weekly squeeze that fired to the short side. You can tell that it was firing to the short side because the candles shifted from green to yellow to red. They broke down below critical support zones. You had momentum right here shifting from blue to red to the downside. So that was, in fact, a squeeze setup that was bearish, fired to the downside. But after that, when the spiders were upwards and onwards on the recovery, you see that we got another squeeze, and it was a bullish squeeze. It hit this key zone of support. We had momentum that was shifting higher. We had our candles shifting from red to green to yellow to bright green. So this right here was a buy signal, and then this right here was also a buy signal as well. So you have a weekly squeeze. It's a great entry for a long-term buy setup, just simply in the SI. So that is an example of something that, I would use for long-term investing. Now, if you look at the QQQs, you have a similar sort of setup. Just recently we had in the queues. So, as I was mentioning, you just have an auto transfer on into your brokerage account. And then when you get a setup like this, where you have a squeeze and you're consolidating and it's in the context of a bullish trend, that's a great spot to get in before you have a breakout. Same thing with this setup right here. We had a daily squeeze, we had incoming volume, we had a shift in pattern from red to yellow to green to light green, and we had a breakout. So that would have been, long-term buy setup right here. You can also go to a monthly chart. One reason why I have been, continuing to buy stocks on the bear market and pullback and everything else that we've seen over the last couple of years is that, you want to buy them when they're down. And if you look at the long-term charts, monthly chart, which is something you'd really not use for trading, but for investing, it's perfect. When you have this pullback, cup and handle, right down into support, key psychological value, and then you see this shift higher, that is a beautiful bullish trend, and something that you can look at from an investment standpoint and say, I want to be continuing to buy this thing during this time frame. Other stocks that are going to be my favorites. The top stock in my portfolio right now is Nvidia. I wish I could say I was like some sort of genius. I did not anticipate it was going to be 718, but I'll tell you the signals that I used. It didn't necessarily like become the top stock on purpose. It was more a function of I was continuing to dollar cost average and add into my top stocks. And this one just is the one that continued to explode. So basically what I like to do is I like to have top 5 stocks where I have basically the most risk on them. And so what I do is I wait. I know what the stocks are, and I'm waiting for opportunities, okay? So I'm for pullbacks, and I'm adding to the shares on pullbacks. I'm not coming in and buying them when they're exploding at the highs. Like I haven't bought Nvidia since I could go back and check, but I would think it was probably back in here in the 300s. And so it's just continued to go. I need to have more setups, but I haven't been continuing to add into it as it's exploded to these new highs, because that doesn't really fit the strategy, right? The strategy says that you're buying these top stocks, these relative strength winners, when they're pulling back and when they're consolidating and they're about to break out. Okay. So here are some of my top stocks. And then I have SMH. This is not, this drawing is not very good. I was trying to kind of make a pie. Didn't really, but Microsoft, Nvidia, Tesla, John Deere, SMH. I also have quite a bit of the QQQ. Another one that buying a lot last year was Costco, because I have, in the beginning, I primarily focused on tech because that's where the high growth areas of the market. But I did want to add, some other relative strength leaders in the space, and I can show you the signals that I used to those as well. So Nvidia actually did have a fantastic weekly signal. I did not add more Nvidia at this spot. When I'm looking at it now, I feel like I should have, but I guess the reason why I didn't was just because it's already gone up so much, and I have a pretty good entry on mine, so I've just felt like I just wanted to hold what I have. In retrospect, probably would have been good to add more around 500, but that's okay. So when you're looking at the signals that you have, um, a shift of a trend after this big downdraft is a good one. So if you're looking at the fall into the 200 simple and you got really extended down into extreme extension zones, and then you can see the way that the trend shifted. It went from red to green to light green. So when you had a major shift like that in trend, when you had price break up above these moving averages, that's where you can see that the trend is shifting. So that is one spot that you can definitely buy long-term stocks. But if you go back and you look at where the weekly squeezes were on here, this is when I was focusing on buying Nvidia. So you can see that there was massive weekly squeeze right here. When you're buying long-term stocks, you want to be buying the ones that nobody's talking about. By the time everybody's talking about it, it's trending on Twitter, everybody wants to know where the targets are. That's not the time to buy it. So you want to be focusing on buying your long-term stocks when a stock is in consolidation and it's done nothing for the last, 3, 6, 9 months, because that's when it's building up all of its energy. You want to look for stocks that do have a strong technical foundation. I mean, you can see that, it was a little bit lackluster here, but after that point, you were still in a pretty good uptrend. And then when you combine the fact that it's in a relative name in a growing space, and then you also look at earnings. Earnings are really important because if you're buying long-term stocks, you want to be looking for companies that are continually increasing their EPS estimates. You want to see companies that are beating earnings. In Nvidia's case, it also helped that they announced a split. Anytime a company announces a split, it's generally going to lead to more people buying the stock. It's not that it changes the value of it. It's just, more people are going to buy it because it's cheaper. So that can cause it to go higher. Another thing that, I like to look at is how this does after earnings. These bubbles that pop up are going to demonstrate, if the stock gapped up or if it gapped down and by how much. Now, you can see that throughout the bear market, it was having some difficulties, right? But then what happened was the earnings kind of shifted the story. So it was gapping down, gapping down, gapping down, gapping down. And then when you're looking for something that's in a downtrend and you want to try to buy it on the way back up, looking for an earnings report as a catalyst can be a great spot to do it, because earnings can oftentimes thing that will shift the macro story and shift the trend. And in this case, you know, looking at where NVIDIA shifted, I mean, this was really it, right? And then you can also see that there's other like a daily squeeze here, daily squeeze here, daily squeeze here. So you can use the daily squeezes as well. But I have found that when these stocks are consolidating on a weekly and a monthly time, like that's the spot to get them. So one of my other top stocks in my portfolio is Soft. Microsoft used to be my top stock intentionally until Nvidia took it over just because of how much it's gone up. But Microsoft was always my number one in here. You can see that on a week frame, there was a recent weekly squeeze when it was down in here, just above $300 a share. It exploded after that. Here again is another shift turn. So whenever you're looking for stocks to buy after, in this case, it was a bear market. But you can see a pattern with the candle shift colors. The candles go from red to yellow to green to light green. You had a high volume coming in. Whenever you have high volume coming in and it breaks a trend with a major shift right here in pattern, that's also going to be another great signal. This is also a signal that demonstrates a high volume out. So that can be a really good time to buy stocks, a major shift in trend. This weekly squeeze did fire to the downside. So, people always ask me, how do you know which way the squeeze is going to fire? Well, the majority of the time, the squeeze is going to fire in the direction of the trend. Now, there are going to be times where it fires to the downside, and this is one of them, bear market. You can see the candles go from green to yellow to red and break underneath these key zones of support that, they're stuck under this level. So that's going to happen sometimes, but this is also a great moment in time to be buying stocks. If you look at all the different weekly squeezes on Microsoft, here was one right here. This is when it was consolidating for a couple months. Boom, it breaks out. Here is another one. Big pullback. Boom, breakout. Here's another one, consolidating for a couple months, breakout. So, I know that it always seems like, well, why would you be buying it? Nobody's talking about it. Why you want to buy it at those moments in time. Like, please do not come in and, buy it when it's at the brand new all-time high. It's going to make it really hard for you to, make some money. So I know that I feel like I'm repeating myself, but the reason why I'm repeating myself is because that's what the strategy is. You want to look for repeat patterns. You want to look for strong stocks, top stocks in their sectors that you can continually dollar cost average into. And if you can find these moments in time where it's consolidating before it's about to break out, that's when you can be, putting your money to work. So here's, a bunch of examples that I went over. A couple other ones that I was buying last year are Amazon and Google. I think right now, by the way, Amazon is definitely tradable up into 190 because anytime a stock is that close to its all-time high, it just acts like a magnet. So I think I should actually put a bullish butterfly on with that price target. But you can just go back and you can just look at the weekly squeeze on these tickers and see, the power that is behind them. So, here's another one. Here's another one. So these are long-term entry points to buy the stock. If you look at Google, Google has been in a fantastic weekly squeeze for, let's see, started squeezing all the way back in September. And what's funny about this one is it's continued to trade higher and the squeeze still hasn't fired. So I still think there's more power in this one. I think it can trade up to 170. Both Google and Amazon are ones that, they're traded significantly higher, but I still think there's more room for them to run. So those are ones that I still think you could buy, even though obviously it would have been better to buy it like 2 or 3 months ago. But remember, when you're dollar cost averaging over time, you're going to have some entries that are going to be higher. you're going to have some entries that are going to be, it's just important that you're continually getting involved in the market. Now that I think is a good one to be adding, I was actually going to buy some shares of this just today. Because I didn't really have too many options that I could buy this month because, everything's so high. So I do try to avoid making too many purchases when the market's at new highs. And I like to build up powder so that when we do get a pullback, because we are going to get a pullback, that will be my moment strike. But a couple options here for right now. We've got John Deere. So John Deere has been essentially trading sideways since all the way back in 2021. Has a weekly squeeze right now. Like, obviously it's gone up, it's gone down, but it's basically at the same spot, right? So it has a weekly squeeze right now. It has earnings that are coming up next week. If you look at a monthly chart, this is where it gets exciting. So anytime a stock has a monthly squeeze, that is a major, major signal. And this stock has been in a monthly squeeze since all the way back in March or May of. So when this thing eventually breaks out, if you throw Fibonacci level on here, so your Fibonacci level is going to give you 475 and then 500 as a target. So I like that one. I think because it's not up at the new high, I think because it is consolidating and it just needs a catalyst to break out. That is one that I'm buying right now. If you look at the last 2 quarters after earnings, it has been a little bit lackluster lately. It gapped down 5.7% last quarter. The quarter before that, it gapped down 2.7%. So something where it's like, all right, but Danielle, like the last 2 quarters, it traded lower. Why would you buy the stock now? Well, I would buy the stock now because the last 2 quarters it did trade lower. It's, you're getting it at a discounted price, and it is still a company that beats earnings estimates on a regular basis. It just increased its dividend. It has a $1.47 dividend. Quarter before that had a $1.35. Quarter it had a $1.25. 2 quarters before that, it had a dividend of $1.20. Companies that are increasing their dividend like that are not doing bad. And then if you look at the EPS estimates, they were estimated to earn $7.49 and they made $8.26. Quarter before that, they're estimated to earn $8.14 and they made $10.20. Quarter before that, they were estimated to earn $8.56 and they made $9.65. So if you look at the technicals and you see, okay, long-term trend, I'm in a squeeze on the weekly and the monthly chart. This is one of the top stocks. It's one of the top stocks in this space. So if you look at your sector spiders, and you see, which stocks are the top stocks within industrials, and you look, what the names are. We've got Caterpillar, Union Pacific, General Electric, Uber. I don't know how they got in there. RTX, Honeywell. Then we have John Deere. So John Deere is one of the top 10 holdings within the industrials sector of the market. I always like to be buying and holding the top holdings in the sector spiders. So that is another good example. A couple other ones. When you get a stock like this, and this is a stock that I've been holding. Anytime you see some major earnings breakouts like this and a major shift in trend, this is going to be a huge sign that this is something that can continue on and reclaim all the way up in here. We'll see, but it's at least doing a good job clawing back the losses from the bear market. So try to pay attention to earnings and how stocks are reacting. A couple others that we had react really well to earnings are going to be Disney. So Disney has kind of shifted in trend here. We've gapped higher 3 quarters in a row now. So if you're looking for something that actually bottomed, Disney would take the cake here because you've got 3 quarters in a row where it gapped up after earnings. It's doing, pretty well overall, and we've seen a major shift in trend. Another one would be ARM. So this is one, is a recent IPO. We're in a nice little bullish trend, and then we have a major earnings gap up. So I do look for companies that are strong. From an earnings perspective, I like to look around and I like to see which companies are busy. I go to Costco every weekend. Place is always a madhouse. So I like to invest in companies that I like to use their product because, if you are familiar with the company, if you like to get, then you're going to have a little bit better of an idea of if you think it's a good long-term investment. And I also like to think of it this way too, is spending all this money at Costco, if I could just make some of it back by holding the stock, that will work for me. Feel the same way about Ulta. Ulta is a great makeup store. It's like the only makeup store I go to. Have to get all kinds of makeup for all my TV segments and everything else. So I like to invest in Ulta and see that Ulta had this major gap up after earnings last quarter, nice breakaway gap. So that is pretty much what I like to do from a long-term investing perspective. It's mostly stocks. I do like to buy ETFs as well. SMH is one of the top 5 holdings in my portfolio. You can see that there's been multiple different monthly squeezes over time where we had these major breakouts. I just think semiconductors is a really important space to be involved in. And, there's definitely going to be volatility. I mean, I'm not going to be someone that's super conservative to follow. Like I said, I am more aggressive as far as my trading and portfolio is concerned. But that's how I get that growth. So if you want more, you can follow me on Twitter. This is going to be my Twitter page right here. I also have a YouTube that I just kind of started recently. So it's kind of funny that all this time I've been making a bunch of videos for, other channels. But now I'm actually working on my own channel. So if you want to follow me on YouTube, you can go to @TraderDanielle. This is the right one right here. There are a bunch of fakers pretending to be me, so watch out for that. I will never ask you for money. If anybody asks you for money pretending to be me, it is not me. So I hope you enjoyed this session. Let me know if you have any questions.